that fly without a leash. In Havana winds of peace, crypto's song in warm nights hum, freedom's beat on every drum. In the market's lively street, every transaction's a heartbeat. Fortunes found in this brave land, crypto cash inside your hand.
And hello, hello, hello. How are you? As you can see, I am back with you live as you are used to. Let me turn down the music a little bit. So you've just seen our Amsterdam photos. We are back in Amsterdam, Andrea and I. We won't stay here for too long. We are finally on our way back to San Antonio on Friday, and then we'll stay there for, I think, about 2 weeks or so. Living the crypto lifestyle, traveling everywhere, and being able to still generate income. It's been a pretty exciting 3 weeks for me. I spent some time in South Africa and Cape Town, but I also had a boot camp coming up for Crypto Alliance, which is a 2-day intensive boot camp that I hold about once a month. And we had the first day and second day on March 17 and 18. So that was wrapped up yesterday. And I had tremendous participation, and I was very happy with the outcome because I was able to teach a 360-degree approach to using crypto. So that means that you don't just trade, okay? You also invest, and you also invest in decentralized finance, and you also invest with other people's money. So there's a whole array of things you can do that lead to true, what shall we call it? True cash flow in crypto, which is really, really important. So I had a person, today we'll talk about FOMC meeting, of course, because that always impacts the markets. And we are at quite a critical point because maybe or maybe not, the bear phase of the market cycle is upon us. That is very likely, right? I had posted on Instagram about my crypto lifestyle, and I had a reaction that was quite interesting, and that was a person saying, well, yeah, if you went into crypto years ago, specifically Bitcoin, that was fine, but now, in that person's opinion, is too late. And that's essentially where I disagree, and I want to challenge that view, because I think that it is definitely not too late to go into crypto and Bitcoin. Specifically, there's 2 charts we're going to look at together right now. The first one is a logarithmic regression chart. So we see what Bitcoin will likely achieve in another 5 years. And then the other chart is something that we will kind of look at in terms of what it can happen when you dollar cost average. So if that is something you're interested in, and you also want to maybe go into Bitcoin, then I need you to like this, to subscribe and share. So let me play our little intro, and then we'll get right into it. Okay, so here I'm back for you with the Bitcoin logarithmic regression chart. This is facts, okay? We're looking at the price of Bitcoin from 2011 to now. This is the blue line here. And you can see it does bounce up and down between the red bands and the green bands, but it does follow, at least for the past decade or a little bit more, it does follow this formula of the logarithmic regression bands. And in the right-hand side here, you can see that at the very top, at some point, the red bands are getting very close to 1 million, okay? And that the far end of this time scale is 2028. So it would be fair to assume that in about 5 years, around the year 2030, there's a very high likelihood that at some point Bitcoin will reach 1 million US dollars. And don't forget that the price evolution on this chart mostly developed in times where there was no mass adoption of Bitcoin. This is absolutely the case right now. We have massive mass adoption of Bitcoin, and there's absolutely no denying in that, because if you go here in Amsterdam, for example, the city behind me, you will go to one of the major streets, and what you see now is brick and mortar stores that bring crypto to people. It was very interesting to see that. It's a very nice street, and then you have a store that says crypto in the windows, and it says, if you open an account with us, you'll get 5 USDT for free, which is, of course, a very cheap lead acquisition, right? Just pay $5 per lead for a business. That is really good business. But I do think that these types of businesses have a place in the ecosystem, and they will speak to a certain demographic. Most likely an older demographic that is not so comfortable navigating things online. They will really be drawn to that type of business. And I'd be really interested if you wanted to start your journey in crypto, would you rather go in person into a store like that in a major city, or would you follow someone like me and potentially go and take a Zoom seminar with them to learn the basics, right? I'd be really interested just to get gauge the sentiment of what you think. By the way, also put in your questions into the comments, no matter what they are. If I know the answer, I'll address it, okay? Put your questions into the comments. You have the opportunity to ask questions to someone who's actually living the crypto lifestyle. By the way, what does living the crypto lifestyle mean? It means that I have enough cash flow to live off of crypto. That is pretty cool. And if some of you want to know, are curious, how does he do that? Well, you have to join my mailing list. I'm blending in the address of my landing page here, crypto.lifestyle. And if you join my mailing list, there's an automatic video that gets triggered, and that lets you know basically how to go about dollar cost averaging into Bitcoin. I had a question also earlier on Instagram from an acquaintance, and she said, now that I started dollar cost averaging into Bitcoin, can I also take that money back into my normal bank account so that I can spend it? And the answer is yes, of course you can. Okay, you got to know how, and you got to set yourself up to do that in the most efficient way. But I can generate crypto income right now, and then within 10 to 15 minutes, I can have that money ready on a crypto-backed debit card. Okay, and that's how I travel a lot with these crypto debit cards. Beautiful. If there are any questions, don't forget, put them in the chat so that I can address those. Hopefully you have joined crypto.lifestyle so that you get a chance at really starting your journey in crypto as well. What we'll look at now is at a few key metrics of the current situation. What should you do right now with your money, right? What am I doing with my money? Well, I have a very, very nice diversification approach where I have the largest amount of my money in a position where I say this needs to be very low risk, okay? For the most time, that is in Bitcoin and Ethereum, but sometimes I de-risk by saving myself into stable coins. That's what I have done recently, by the way, and I'm going to show you on the chart why that was. So that is for my large retirement fund, if you will. And then there's a nice chunk in the middle that generates cash flow, okay? And I like to do that with decentralized finance. DeFi is a topic that a lot of people don't know much about, and it is a little bit of a wild, wild west. So you do need some guidance and you do need prudence to navigate it. But it's absolutely beautiful. I love it because what you are essentially doing is while everyone else is digging for gold, you are selling the shovels, okay? So that is essentially the metaphor of what DeFi is. You invest into those structures, those foundations that the traders need to trade. So let's look at the charts so that you start getting a feeling for what matters, and we'll look at some metrics here that are really important. So first of all, what I always look at every day is open interest. Okay, open interest means how many people have open trades. So right now, not too many. That really shows that people are a little bit hesitant to trade. Liquidation levels are also not all too high. RSI is neutral. So that tells us people are waiting for a decision to be made, right? People are really a little bit worried. Where is Bitcoin going right now? Here's the Bitcoin chart. And we see it is a little bit in no man's land here in the middle of this these very important levels here around 71,000 and between 71,000 and 99,000 is a little bit of a no man's land, and you can't really know what exactly what will happen. That's also why if we look at the fear and greed index, here you can see it's pretty low, right? The fear and greed index for the crypto market sentiment is around 32, and that would make sense. This also reflects in an important chart that you should look at daily, which is the daily exchange volume. This shows how many people bring fiat money into the crypto ecosystem. And you can see ever since here, November 15, we basically have a downwards trend here where this chart puts in lower highs and lower lows. And that is a very, very bad sign, right? Because it shows that less and less people bring new money into crypto, and that leads to a low volume environment. And when you have a low volume environment, then there's also low liquidity often, and that then leads to easy market manipulation, meaning a president tweets, right? The president issues a tweet, for example, and then the markets react very heavily to that. Or it doesn't even have to be the president. The FOMC today meets and they say, well, we are likely going to continue quantitative tightening. Okay, what does that mean? It means they keep the money out of the market. Then the price might really go down. Or if they make the slightest, even the slightest allusion to stopping quantitative tightening, referred to as QT, okay, so that means they may stop buying up assets. They may stop the fact that they don't let money flow into the market and just come to a halt in that kind of decision point and
give hope for quantitative easing, which is they buy up assets again, meaning pushing money into the market, then you will have actually potentially a very favorable short-term bounce. So that we don't really like that as investors when we have this highly volatile market. As traders, we do, because whenever the markets go up and down, we can place trades in both directions. A lot of people don't know that you can make money when the markets go up and also when it goes down. And so what happens for those times where we just kind of are unsure and we chop around sideways, go a little bit up, go a little bit down? That is actually very, very perfect for DeFi liquidity pools, right? Because that's what I mentioned earlier. You invest into the shovels and you let others dig for the gold, and you get some nice juicy fees in return. So let's see. We have a question here from Nadia. Is crypto will be affected a lot if a third world war starts? Yes, of course it will be affected a lot, Nadia, because crypto is a high-risk asset, right? And what people don't like in uncertain times is risk. So it is the last thing they want when a world war starts, is to be invested in risky assets. So that would likely be very negative for crypto. However, remember what I said, whenever there's movements in markets, we can make money, even if the price goes down, even if the price goes sideways. You just need to know when to do what. And that is essentially what I offer you some guidance on if you join my mailing list, Crypto Alliance, crypto.lifestyle, which is part of Crypto Alliance. Then you can get some guidance on that. So if we look at the prices of Bitcoin right now, let's look at it a little bit more, because I want to tell you about this really interesting indicator that you can use to do some simple but very effective trading strategies, is to follow the cross of the 50-day moving average and the 200-day moving average. As you can see here, the cross happened last time here in October, where the 50-day moving average crossed the 200-day moving average in the sense where it was above it. Okay, that is typically a signal that is bullish, and whenever price operates above this 200-day moving average, that is a definition of a bull market, right? So you would have entered into the crypto market here, and you would have stayed in until the price goes below the 50 moving average. You would have made a nice gain here. So let's focus on what's going on right now, because it's not looking very good. Essentially, we see with the turning of the red curve here, the 50-day moving average, that we really are no longer in an uptrend right now. We are also seeing that we lost price is below the 200 moving average, which is really a warning sign. Okay, so in my long-term holdings that are my retirement funds, I already exited my positions pretty much around here. Okay, when the 50-day moving average started to slant down, I saved myself into stable coins. But what we are looking at right now is, if this continues, if price continues to go down here, then we might come into the situation where we have that cross situation again, but in the inverse way, where the 50-day moving average is below the 200. And that would be a very bad sign. That would also mean that the bear cycle has started. So hopefully it doesn't come to that. So what do we think can happen now? What do we think can happen? Well, here is here are the options, in my opinion. What happens very likely is that we will revisit at some point this important zone around 72,000, okay? And then I think there's a chance of putting on the final leg of the bull run. That is definitely, for most of my viewers, I highly recommend waiting until price finds support again in this area. Okay, that is the most likely outcome. The other scenario that could occur is that we kind of chop around here in this area, but then I wouldn't jump back in until we have shown strength and support at this important level. Okay, so in crypto, there's always trading ranges where price bounces up and down these ranges. Okay, and you need to learn to identify those ranges, and then based on your risk appetite, make decisions. A lot of traders also who are a little bit who have a little bit more hunger for risk, what they will do now is they will short the crypto market down to this support level. Okay, so what does that look like? Well, we have a shorting tool here. With the FOMC meeting happening later today, it's likely that price goes a little bit higher, we pump into the FOMC meeting, and then very likely see there's like an upper resistance here. So very likely around here, I would say that pump stops. So people could place their shorts here, maybe something like this. Okay. Let me see, bring that up again. So this would be a 6-to-1 trade. And that's not a bad setup, okay? Even if you put your stop loss a little bit higher to give you a little bit more breathing space, then it is a 3-to-6 risk-reward ratio trade, which is also not bad. And let's not forget, the people who place these trades often and are very disciplined in sticking to their stop losses are the ones making money in trading. Okay, it's all about managing your risk and about looking at the charts and coming up with a thesis like I am doing here with you right now, and then sticking to it. If we were wrong, well, so be it. Then we will accept the loss, right? But here's the other part. If we are right, we also need to let the trade unfold and not take our profits too fast, okay? So typically what happens is that traders will either take the profits too fast here, or they will want to be greedy and wait until price hits this target that they have set for themselves. What I recommend and what most successful traders do is, instead of being on one of the both extremes, you set up lines in between your range, and you take profits at predetermined levels. Okay, and instead of doing that just kind of by guessing, we can use Fibonacci retracement levels. Okay, so we have a Fibonacci tool, and we place that on top of the range here. And then it's actually, you could do something like this, maybe, if we were a little bit more narrow. So then definitely here at the 382 Fibonacci level would be a take profit moment, and here at the 236, and then finally at the lower support of this range. So that is how you go about trading. But let me tell you one thing. This is very important to understand. If you are trading like this, first of all, most people, 80% of traders actually lose money. There's only 20% who make money. And obviously, just by sheer probability and mathematics, it's likely that you fall into the 80%, right? So what takes you out of the 80%? It is education and experience and discipline. Education, experience, and discipline. So you absolutely need a community that teaches you these things and that's what Crypto Lifestyle offers. Crypto Alliance is our community, okay? And if you go to the landing page with the address crypto.lifestyle, you can join our mailing list, and then you are in. And yeah, I think that's all I had for today. If there are any other questions, please put them in the chat. I'll try to answer them. Oh yeah, the other thing I wanted to say. So given the fact that most traders lose money, and also, by the way, that can be a fluctuating situation, right? I often make a nice chunk of money in week A, and then in week B, I lose all of it. And in week C, I make up for it and even more. So bottom line, looking at a quarter, I made money, but it's kind of not really helpful to say I can have daily cash flow based on that. You really need to zoom out a little bit higher. Most people do, unless you are a day trader who's really, really skilled and who has a lot of time to sit behind these charts in real time, 4 hours a day or more, then you can maybe live off of it day trading. But for everyone else, people most likely like you and I, who have businesses to run or jobs to go to, is better, in my opinion, to have diversification into also, again, decentralized finance. Decentralized finance being a way to sell the shovels when everyone else is digging for gold, okay? But all of that needs to be learned, and I am here to offer you the opportunity. If you join my community, if you join Crypto Alliance, you have a shot at learning it. You need patience. You cannot expect this to master this overnight. I personally took over 15 months really to get to a point where I feel confident enough to teach it to others. One thing that distinguishes me from a lot of other YouTubers and content creators is that I'm very transparent, and I only show exactly what I do for myself. I only teach that. So hopefully this was helpful to you. I will take advantage of one of the last days in Amsterdam here, and we'll go and enjoy our day. Also prepare the videos that we did for our students. And yeah, hopefully one of these days you will join us. Again, for now, you can just go to the website crypto.lifestyle and then join our mailing list. If there's no other questions, then stay safe. Thank you for your time, and I'll see you very, very soon here on this platform. Bye-bye for now.